Avinash Gorakshakar, founder and head research at Avinash Mentor Services. And thanks so much for joining in. Let me just go across, and take the first query right now. This one's on Bajaj Finance, and actually Priyanka from Mumbai, who is sending across quite a few queries now and is a regular viewer, is holding 22,000 shares of this counter. She's holding them at 709 and asking a one-year view. Now, Avinash, she actually got in at quite a decent price and has amassed a very good, decent quantity as well. Would you recommend her to continue holding on to this counter at this point of time? Just in terms of portfolio positioning also is quite a big, but what's your view?
No, I think Puneet, you can definitely continue to hold on. See, I think numbers for Bajaj Finance have been very stable, and I think asset quality has also remained pretty, robust. I think the coming year should be a good year. In fact, from the conference call commentary and the numbers which were reported, I think very clearly, over the next 6 to 12 months, we believe that NBFCs like Bajaj Finance should do reasonably well. I think interest rates have also remained stable, plus consumption, post the GST cuts have actually helped, more demand move quite positively. So I think, over the next, say, 6 to 12 months, we could look at prices of around 1,050 to 1,100. Hopefully, once the market, sentiment also improves. But I think definitely the traction looks pretty positive and we should expect better numbers for 26, 27.
Got the next question coming in now. It's from Mulli from Bangalore. And his question is on travel food services. He's bought it at 1,270 rupees per share. Asking Avinash what should be his time frame for the next 12 to 18 months if he should continue holding. Would you recommend that?
Yeah, I think he should hold on. See, it's a very well-established business model where travel and food services operates in most of the airport, where most of the customers walk in, and I think it's a well-established, robust business model. So I think despite the fact that valuations are not cheap, they're fair to expensive. I think it's a very unique business model which is growing quite rapidly. So I would suggest that 12 to 18 months could be a good time frame where I think the investor could expect a decent risk reward. So continue to hold.
When move forward, you heard the management of J&K Bank, and it's been one of the counters that actually done well in the last 1 year, given the correction that we saw at the start of 2025. Do you have an opinion on the counter? What should investors do with it now?
No, I think, the management commentary appears to be very positive. And I think there are valid reasons why, earlier the bank's performance was impacted. But I think going forward in FY27, Puneet, I think the bank is on a very strong wicket. I think in terms of asset quality, in terms of disbursements, in terms of the overall growth opportunity, I think despite the fact that, large and a majority portion of its revenue comes from only one state, the balance sheet is managed very well. So our sense is that around 130, 31, one could definitely look at it from a year's perspective. I think one could definitely expect a decent risk reward. But clearly, I think the first quarter of FY26-27 will be the near-term trigger. Markets are expecting that possibly, after this quarter comes in, there will be some surety about the earnings growth, which we believe could be at least 15 to 16%. So definitely a good buy, but from a slightly medium-term angle.
Fair point. Next question, coming now on Eternal, and our viewer holds 438 shares at 228. Now, wants a long-term view on this particular counter. So, Avinash, what's your opinion on this one for Birandi? Because, I wouldn't say beaten down, but has corrected from the highs and is at a very interesting juncture now for investors who want to buy into it, might have missed the previous rally. How did you view the Q4 results? It's a continuation essentially of opening out much more stores in dark stores, continuing that food delivery model. What's your opinion?
No, I think, Puneet, from a broader perspective, I think the company has done well. Fourth quarter numbers were much better in terms of profitability margins. And I think Blinkit has been a very strong performer. I think clearly, the market opportunity when they launched Blinkit was not anticipated. But today, I think Blinkit is growing by leaps and bounds. And going forward, maybe in the next 1 or 2 years, I think you could see a bigger market opportunity being tapped by Eternal. So, in the short term, the stock will remain volatile. I think after the results, the stock has seen a fresh wave of selling. But fundamentally, I think the business model has emerged stronger. And I think now, with an annuity kind of business model, at least the next 2 years, hopefully, if demand continues to be strong and the kind of, volume growth we see in the Blinkit division, I would not be surprised that a significant amount of upside is possible. But I think you need to keep a time frame of at least 12 to 18 months. Maybe on a quarter to quarter basis, it's not possible to make a significant amount of alpha. But the next 2 years are going to be very promising for the company.
Got it. And thanks for the detailed opinion, Avinash. Hopefully, Birandeep, that answers your question. But another caller from Hyderabad, Anjali, has a stock query for us. Anjali, good morning. Welcome to the show. What's your query?
Good morning. I'm holding Elecon Engineering from long time, maybe from 1 year.
Okay.
So I'm holding 53 shares at the rate of 558. The stock was down from almost after I bought. So now it recovered and now the price is the same as what I bought. So is it good time to sell or should I wait for more upside?
Got it. And, very fair question. Avinash, from the January low, stocks up almost 50%. I think it hit a low of almost 360 odd levels. Any view on Elecon Engineering? Should Anjali exit or continue to hold?
No, see, I think there were a lot of exceptionals, in the fourth quarter numbers. And I think if you strip off those numbers, then the performance has been pretty decent. And I think the management, outlook in the commentary was also quite positive. In fact, the management has said that, orders for some time had been postponed because of some midterm kind of, correction which happened in their marketing process. But I think now orders are trickling in. Hopefully, the first quarter for this financial year is going to be quite better. And just to add, there are a lot of ultra HNI investors like Vijay Kedia who already has a very significant position here. So my sense is that, despite the fact that the stock has not performed for the investor, keep a view of at least 12 to 15 months. I think in this space, Elecon has a very strong, dominant market presence. And I think a good amount of risk upside, risk reward is very much possible. So continue to hold and keep the conviction for the next 12 to 15 months.
Nash, how do you view the stock now? Because we've started to see a fresh up move on players like TVS, market rewarding players like Ather as well. And I think we have questions. We'll take that in just a bit. But what's your view on Hero? What do you recommend for Arnav to do at 5043?
No, I think he should continue to hold. I think, as you rightly mentioned, if the margin trajectory has been maintained at 14 to 16%, it's good because typically, commodity prices have gone up. And despite that, the management is pretty confident of maintaining its margins. And I think volume growth is going to be the key driver. I think the demand for two-wheelers after a long time has picked up. Hero Motor has got a large presence in the rural markets. Most importantly, it's a free cash flow generating, company. So capex of 1,500 crores is not going to be a problem. They will fund it entirely from their cash accruals. And I think the market should obviously look at new product launches. I think apart from adding on to their electric vehicle product bouquet, new products, in the IC segment also are important. And that is where I think markets would look at it. But net, I think the next 12 to 15 months look pretty positive. So I won't be surprised the stock will move up steadily. Maybe, after the results, the stock may see some corrective action. But fundamentally, the company is on a strong wicket. So we would prefer that wait for the next 12 to 15 months. You should get a decent risk reward.
And his query largely being a medium-term one. He's bought into very close to the IPO price at 2165. I think it was the IPO price. And wants to hold for the next 2 years, Avinash. And the question largely being from him, is this the right levels to buy a little bit more after the 50% run? What would you recommend?
No, I think, ICICI AMC should definitely do well. I think it's a very strong annuity-based business model. But I think, since it's moved up by almost 50%, I would say that, it's better that he buys it in a staggered manner. Look at some dips if you get and accumulate the position slowly. Maybe do a small SIP kind of approach and then gradually accumulate it and stay invested for the next 2 years.
From Chennai, Yamini, a very good morning to you. What's your query about?
Good morning, Mahima. My query is regarding Tata Power. I have 10 shares of Tata Power at 413 rupees. And I'm looking to accumulate it at the current levels, and I have a long-term perspective. And is it also advisable to take an SIP on the same?
Okay, all right. Got your question. I'll take this up with Avinash. Then, Avinash, your view on Tata Power from a long-term perspective and whether SIP doing this counter makes sense.
Yeah, I think power generation continues to be a very strong sector where a lot of interest is coming in, and I think looking at the kind of strong demand from the data center opportunity, typically this summer has also been very hot, so I think you're going to see a lot of power demand coming up. In case of Tata Power, I think it's better that the investor takes at least a 2-year view and gradually starts an SIP, because clearly over the next 2 years the renewable space is also going to be a very big opportunity for Tata Power. So I think, rather than buying everything in one shot, it's better that you buy it in a staggered manner in small pieces and then stay invested for the next, say, 2 to 3 years.
Got that view, Avinash. But the next counter is on Tarsin's product. It's a very small counter. But Avinash, just trying my luck here because Deepak is holding on to 354 shares, bought at 350. And he's in a loss of almost 35% right now. What would you recommend, Avinash? Because I know you track a lot of smaller companies as well. It's been a rank underperformer, down almost 70% from when it listed back in 2021 or 2. Any view here?
No, I think, see, in the short term, I don't think there are going to be any major triggers. The investor has purchased the stock at a slightly, elevated level. So I would say that, if he wants, he can switch over, because I feel that within the banking space, stocks like Federal Bank or typically a Bank of Maharashtra would give him a better alpha. As you rightly mentioned, the stock has underperformed significantly. And in such kind of cases, it takes at least a couple of quarters or sometimes even more to, recover. So my sense is, something like a Bank of Maharashtra or maybe a Federal Bank would be a better choice, because year growth is clearly evident, and I think the next 6 to 12 months could be better. So I think a switch would be better, but definitely this company is unlikely to recover in the short term in a very big way.
Sharma from Kolkata is asking in this question, and it's a very topical one on L&T. He's bought 50 shares at almost 4,000 rupees, so bought it post the correction. Now, Avinash, how did you see the results? I think largely some disappointment on margins, on the guidance till 2031 as well. Any opinion here? Because it's one which a lot of investors actually hold on to, right? What would you recommend to someone who's already holding as well as to Sunny?
No, I think, see, these numbers were on expected lines, Puneet, and I think maybe the next quarter also will be challenging. But hopefully, if the geopolitical situation improves and I think things get back to normal, then I think L&T definitely should do business back to normal. And I think clearly in terms of the opportunity, L&T has got several pockets of opportunity like capital goods, infra, defense. So I would say that the investor should hold on. Keep some time invested here and have the conviction. The management has the potential to bounce back. And I think better numbers could come in post-September. So I think till that time, the stock may be a market performer, but longer term, we continue to be positive.
The next one is on Juniper Hotels. Our viewer Nagraj from Hyderabad is holding 40 shares, bought at the levels of 360. He says he's sitting on a loss of around 6,000 odd rupees. Wants to know if he can continue to hold from a long-term perspective or book losses. Avinash, any view on Juniper Hotels?
No, I think here my sense is if the investor has a couple of years in mind, then I think he should average and stay invested. It's a good business model. The promoters have the right bandwidth, but I think the investor has purchased the stock at a slightly elevated level. So unless the investor spends a considerable amount of time here, only then the risk reward would come in. So I think rather than booking a loss, increase the time frame, and I think average at the current level, you will definitely be rewarded over the longer term.
Coming in now. It's from Murli from Kerala. He's holding 150 shares of Zentech at almost 1,800, and results were weak yesterday. Reported stock was also down. Let's look at the 5-day chart to get the perspective to our viewers as well. Asking what's the future now, Avinash? Disappointing results, and your stock's taken a beating post that. And there were some concerns, right, of order book being built up only for just a couple of quarters as well. So limited visibility there. What's your view?
No, I think, see, Puneet, in companies like Zen Technologies, you can't take a quarter-on-quarter view. I think in the past also we have seen, some very bad quarters and then the company bouncing back. I feel that, in a company like Zen Technologies at this level, if you don't have at least a 18 to 24 month view, you will not be able to ride the entire value creation journey. So I think, the company continues to do well. The management is quite strong and its domain expertise is there. The defense opportunity is also very large. So I would say that, in the short term, the stock will struggle because these numbers are definitely not exciting. The markets were expecting better numbers. So I think take a longer term view. And I think if you want to have this share, then I think unless you have a perspective of 12 to 18 months, it's not possible for you to make money. So stay invested, but keep the long story, intact. I think short term, the stock will struggle.